Hi, my name is Dion Rebello, and this is the Bullion Vault. Hi, Willem, how you doing?
Well in yourself, Dion.
Good, thank you. So this is episode 41. It's been quite an interesting week where gold soared to all-time highs of over 4,300,
384, I think it was.
just short of that 4,400 mark, and subsequently did a retrace or a profit taking, as we'd look at it, down to around 4,000, just as I can see today, around $4,040 an ounce.
Yeah, and it's not just gold, silver, platinum followed suit, and yeah, as you mentioned, profit taking. If we look at the pricing, we had historical highs on two of the three metals. Platinum has been higher in the past, obviously, but on
Yeah.
gold and silver, we've had historic highs, all-time highs, and it's natural that at some point people are going to want to cash in on that. The people have been patient. They saw this massive rise. They saw these great prices, and they want to cash in. So they've been selling off, obviously, to get that profit, as you rightly said. But there's been one or two other things, obviously, that has contributed to that as well. Firstly, as we know, gold, silver, all the bullion is priced in US dollars, and the US dollar has been strengthening this week. So, of course, when the US dollar does strengthen, gold and silver is priced in US dollars. It makes it more expensive for external investors to actually buy those assets, to buy gold and silver. And as a result, the price comes down. And then, lastly, geopolitical tensions have eased off a little bit. There's talks about having meetings with China and Canada. Well, we'll see what happens with the Canada one after their ad, um, but yeah, there's talks about they're going into talks with the countries, especially China, which is a big one. And then, of course, there's the ceasefire between Israel and Gaza, which also has sort of eased off tensions a little bit in that region, and all of that has given investors a bit more confidence to put their money into other assets.
Thanks for that summary, Willem. And you've really outlined the current situation of where gold and bullion is. But what's interesting is, of course, it's sensational. You look at gold reaching and silver reaching these all-time highs, and suddenly there's this massive pullback, but it's not really. There's context. I saw in the media, gold drops to 12% in a 10, within the last 10 years. This is the biggest drop in one day, and so on. And of course, it's very sensational. And in the context of if we had viewed gold, say, 5 years ago, that percentage of a drop in one day would have been significant, and it would have been concerning based on the time where we were and the so-called conditions around it. We see where it is right now, and this also applies to silver and, as you mentioned, platinum. In fact, all the precious metals. Is there was this pullback? There is that pullback, and the first thing, of course, clients say, "Now what?" Is this the sell-off? Is this where gold's going to plummet back to $1,500 an ounce, and all my money put in here is going to go to nothing? And we need to put a measured approach and a measured response to this. It's very clear that yes, these prices shot up. There's been a bit of a profit taking, and that's how we look at it. And first thing we say is this is probably one of the better times to be buying into bullion because the prices are down and down to a significant point that when they do start to escalate again, you've gained that value in what would have been a lot more expensive.
Yeah, it's you just rightly mentioned, people talking about, oh, this is the biggest drop in gold since, the 1980s, when it plummeted by, how much was it? I think it was something insane, like 60%, that it fell over the space of 5 years. And everybody's pointing to that and going, but look, 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 that's what's happening now. But there's a massive difference between what happened there and what's happening now. Firstly, during the 1970s, gold was sitting at $40 an ounce. That was when the US dollar was still actually tied to gold. It was backed by gold, and we had 1 ounce was roughly $40. Then by 1980, in January 1980, it reached $850 an ounce, and that largely had to do with I think it was Nixon, old Tricky Dick, removing
Yes.
the gold backing from the dollar, and you know, so we saw that $850 an ounce, but where we're talking now at the peak, I think it was a 60 or 64% increase or something this year
Yeah.
in the price of gold. What we were talking about, what happened in 1980 was 20 times increase. It's quite a significant difference happening right there. And then gold fell 60% over the next 5 years to $320 per ounce. But back then, it was mainly driven by that link between the US dollar and gold. And once that was removed, we had pressure on the dollar from inflation. We had also a very small sovereign debt back then that the US had compared to now. We sitting at what is it at the moment? I mean, it's something like almost $40 trillion now, and it's increased by like $2 trillion over the past year. So it's there's a lot more US debt at the moment, while back then there wasn't. So a lot of external companies didn't own that US debt, while now a lot of that debt is owned by foreign entities. And if we look at the gold reserves as well, back then the US had enough gold to just pay off their debt. It's a bit of a different story at the moment.
Yeah, and I think it's very important that you raise that because it was a shift in monetary policy globally, with the dollar removed or gold removed from the dollar as the gold standard. And that also had a fundamental effect going into the next decades that prior to where we are now. The monetary policy was about if you got an issue, just, you know, procure more money into the market. And central banks would then print more money, and again, inflation would go up in cost. And currently, that's why we're living in a world where a majority of the first world countries are living with over 100% debt to GDP ratios. And it's not sustainable. We also look at gold and we look at the context of that era versus now.
And that's actually what I wanted to get to now, because I've just mentioned all of the sort of differences, and the thing that it comes down to right now is to reach that same level where gold was then versus where it is now, it would have to increase by another 8 times. It has to go up to $40,000 an ounce to reach that same level. I think where I was going with this is, I've listed the sort of the comparison between then and now. And what I was getting to was today, according to this article I've just read, the total value of the US gold reserve is $1 trillion. So gold would need to rise another 8 times to $40,000 an ounce for the US to have the capacity to pay us off its foreign lenders like it did in 1980. And so, yeah, they go on to say until gold reaches $40,000 an ounce, it won't be in that same bubble territory as it was in the 80s.
Well, I tell you, if gold had to be $40,000 an ounce, we'd be in a very different world. And do I believe it's not possible? I don't, and I've got to be very careful because when we did forecasting for the beginning of this year, we kind of spoke of the territory we're in now as being this is going to be a bit on the far out predictions, and yet it's been nailed. And what's interesting, I see 2026 outlooks coming up, and no one's really kind of anchoring what the value of gold will be. But what's interesting in this whole thing is also gold has become the world's first asset to surpass $30 trillion in capital market share.
Yeah, and that's quite significant. If you look at some of the other assets, Nvidia is 4.4 trillion. You look at something like Microsoft, 3.8 trillion, Apple, 3.6 trillion, and you've got gold sitting at 30 trillion. It just gives you an idea how big it really is, how much of it is actually out there moving around, and how significant of an asset it is.
Yeah, and again, I think this plays into its repositioning within the financial markets. For many years, it was considered to be not an alternate form of investing, because it didn't yield dividends and so on. Yet, on its performance, on its ability to negate the losses from inflation and so on, gold has maintained its value and grown over periods where other things, such as currencies and, as I mentioned, inflation, have increased.
It's funny that you mentioned dividends because I just thought about it. Um, as far as I know, Amazon doesn't give dividends either. So, it's funny that people use that as a key point of why stocks and the like are better than gold. But there's many major stocks out there. Like, as I said, I might be wrong on this. I read it a while ago. It might have changed. But, you've got stocks like Amazon that doesn't pay out dividends either. So, it's kind of an interesting one for people to always sort of hone in on and hammer on. But yeah, I think if we just look at the performance, it speaks enough.
And it speaks enough to the period of time we're in. And the fact that it rose and there was this brief pullback that we're currently sitting in. Um, I get asked this question all the time: what should I do? And personally, this is a point to start to reconsider buying, because it is at good value compared to where it was. We know that it now has the capabilities of going back to that same level. And over a short period of time, you can recoup some of your investment, as far as, because when you do buy physical, you're not buying at spot price, you're buying at a premium and so on. So you need to recoup some of those initial expenses to make it profitable.
Definitely, and I think the most important thing is, for anybody asking, what should I do? If you've already bought, don't sell. It's as
Yeah.
simple as that. If you sell now, you lose. If you're patient, you hang on, I don't know, another 5 years, maybe 10 years, maybe 2 years. you know,
Maybe 6 months.
that's the thing
Yeah.
at the moment. It is quite volatile at the moment, but from everything we've seen this year, it's just been trending up.
Yeah. And again, so it's very important that we do highlight that this is a brief period on its movement, and there's natural movements as it goes up. There has to be some retraces and retracements. And again, that is all part of a dynamic, fluid market where prices are being taken throughout the world, the demand from central banks, from your investment institutions that are buying into gold and so on. That hasn't changed.
Definitely not. I mean, if we're looking at the world central banks right now, they're all buying gold, and um, institutional investors as well, as you mentioned, they're buying gold. And when those guys buy gold, or when those guys buy into any particular asset, then sit up, take notice, and it's usually a good indication that it would be a good idea to do the same.
Yeah, so we've spoken a bit about gold. Of course, silver has had the same thing where it hit that 51.70 a couple of weeks ago. It's now sitting at around 47.60. So it is slightly down. But again, this is a great opportunity to reevaluate, reassess, and see what you can allocate into what. And actually, this is a good buying opportunity.
Yeah, and I mean, we always say patience is key when dealing with precious metals, and I think you need to practice that same restraint when the price is going down. Don't simply see, oh, my value is eroding, what to do, jump ship, get rid of it, cut my losses. You're going to lose then, as I said. And right now, yeah, I think the other day I read an article, one of the economists said, buy the dip. And you know, we've rightly said it's very volatile at the moment. It's tricky to know where exactly it's going to go from one day to the next. We see an increase of $100 over a day when we see a drop of $100 over the next day or so. It is volatile at the moment. It is tricky to know when to buy, but once again, just practice that restraint and patience.
Yeah, we also pay attention to market leaders. I mean, you look at Ray Dalio, and he has reiterated that these are periods of time where gold will still remain where it is based on the fundamentals around it. We look at the tension and all the issues between the US and China, which seems to be quite an important part of the story. And that's not going to be sold overnight. There's also this vying for power. China is starting to push to become the global dominant market player internationally. And this also is going to play into that. We've spoken how the US does their foreign policy with the likes of South Africa and AGOA. We're marking up your tariffs to this, take it or leave it. And being a small country, we don't have a choice. We got to either look for other markets that we could possibly supply into and possibly get the same kind of value out, or we got to just suck it up. China, on the other hand, doesn't. They're in a position that they can actually take it and say, really, if you want to do this, we'll do that.
Yeah, and it's very interesting now that China has sort of launched their own payment system within the BRICS countries, where you can then no longer demanding goods and services to be paid for in US dollars, but now it's being paid for in Chinese yuan. And I think that's a significant move from China. It just shows how committed they are to actually cutting themselves away from the US dollar and basically cutting the rest of the world away from the US dollar, because I mean we've seen how easy it is for the US to impose sanctions, to impose these tariffs, and the like. And I think more and more countries want to get away from that, want to no longer be tied to a monetary system where it's that easy for a single country or single entity to basically bully the rest of the world into doing what they say.
What I find interesting with what she's saying, and it's going to come back to bite Trump, is he did this as we've spoken at length before, where we understand that a lot of the industry was lost in the States through the 80s and 90s and went into China, into the Eastern world, into manufacturing. And a lot of those big hubs in the US literally shut down overnight. And this is his way of trying to re-stimulate those environments. Hashtag note, 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 that this can't be done overnight, that it's going to take time, it's going to take reinvesting, it's going to take rebuilding of infrastructure and industries that are literally dormant and dead. Come this now, and China is in a position where they're no longer like, say, South Africa or other countries where you take it or leave it. They have got a choice. They have got ambition to become the strongest nation on the planet and the most economically powerful nation.
Yeah, and I think the other problem is, as you rightly said, rebuilding those industries, rebuilding the capacity to produce in the US is going to take a very long time. I mean, it's going to take longer than Trump's going to be around. Um, and it's largely about how you're going about it. First thing that they sorely lack is the knowledge of how to run these things. I mean, we saw that with, I think it was Samsung, or was it? It was one of the South Korean companies that was building a factory there, and they actually had to bring out all the workers to show, the US workers how it works, how to do everything. They all, of course, got deported, and now they're saying, no, thank you, we want no more part of that. And it's that's the problem right now. The idea is there, but there's policies sort of preventing that from happening, which is also a problem that we've got right here in South Africa. The idea is there, but there's so much red tape and policies that's preventing investors from coming in and spending their money here and investing in the country itself. We just got brilliant news. We're no longer grey listed. And this would be the perfect time for those investors to come in and actually invest in South Africa. But it is so, so difficult to actually invest in South Africa, to actually do business in South Africa.
Yeah, I just think of this whole thing with Donald Trump, and as I said, that in my mind, he, I understand why he's done what he did, logically, what he is trying to achieve. But to be honest, if anything, he's basically fast-tracked China's ambitions even more, saying if this is what they prepare to do with the various administrations, so if it's a Democrat, it's different. Then a Republican comes in, and so China now more than ever is aware of what they need to do. And if anything, they will fast track and they'll make sure that they do achieve what they want to do and ultimately become the most dominant nation on the planet.
Well, you mentioned what happens if a Democrat administration comes in, and I think the world is waking up to that, saying, but every 4 years we could have a total 180 swing, and that speaks to the uncertainty that we've been seeing across the world. At, as we can see, gold hit $4,380 an ounce.
Yeah, and again, that uncertainty from a large part has been simulated from within the country, within the US, and then it reflects that to the rest of the world. And that's why I say, I think, if anything, Trump has made the ultimate blunder. He has gone and created the blueprint for China to make sure that they fast track what they want, so this kind of situation doesn't happen again.
And I think, they should have seen it coming, to be honest. What happened in his first stint, he went and he put sanctions on Huawei.
Yeah.
And what has happened since? Huawei has taken that hit, said, okay, it's a big hit, but let's rebuild and let's do it our way now. Instead of importing chips from Korea or
Taiwan.
Taiwan or wherever, we're going to make our own chips. We're going to make our own lithograph machines. We're going to go back, and this is also what they've done with their car manufacturers, is we're going to go and we're going to own the supply chain from where the raw materials come out of the ground to where it ends up in the customer's hand.
Yeah.
And that's what they're doing. It's sort of the absolute mirror of what America has done, where America was source and supply from all over the world, the cheapest we can find here and there and from everywhere, largely from China, ironically. China has said, no, we're not going to do that. We're going to own everything from where it comes out of the ground to where it ends up with a customer. And that's the difference we're seeing.
Yeah, and I think what you've highlighted is exactly what I've been saying. Is I think if anything, what Trump has tried to achieve, he's pretty much shot himself in the foot. And anything that was going to probably take a longer period of time to achieve, as you use the Huawei example, just gets fast tracked. South Africa, yes, we are potentially losing a market, or we having to sweat and see how we can get through such high tariffs. But the truth is, we are small enough in economy size to look for other markets. And we should be rightfully doing that.
Yeah, I mean, we look at it and make no mistake, it has a significant impact on our entire economy. I mean, you know how slow it is at the moment. We've got under one, or less than single digit economic growth at the moment, which is extremely concerning. And losing a major market like the US, or just the amount of money we're actually losing simply because it's costing US importers more to buy these goods, we are losing sales and we are losing a big chunk of money from that. But yes, we should be looking to other economies, to other trading partners, and you know we're looking at the BRICS nations. That was the whole idea behind it, to have these nations that can trade among each other, that aren't tied to the almighty dollar and the US. And that's probably where we should be looking. We should be looking at India, China, We should be looking at the rest of Europe, in fact. You know, there are other markets. It's not an absolute that if you aren't dealing with America, you aren't dealing with anyone.
Well, it's interesting. In this next month we're going into, which is November, the G20 is going to be held in Johannesburg. And I know that there's a lot of from within South Africa to make sure it's a successful event. But I think it's going to be quite interesting. And I think as we go into November, we will definitely do a show on the G20, understanding the role players, who's going to be there, who isn't. And more specifically, it's going to be interesting to hear with the likes of Trump, with the likes of Europe, and with the likes of China, and so on, the BRICS nations, the feedback from those meetings and the different positions that countries are going to take. Because this is that uncertain period. This is where people are kind of repositioning themselves because of the reaction from the US. And again, we can't say that South Africa wasn't expecting it. You know, we've spoken about this before, is we go to the US with a begging bowl, and yet we're holding hands with the BRICS nations. We are the S on BRICS. So that doesn't work either. So we had the go agreement with the US, and yet we were also holding hands with BRICS to try to reestablish that. It's contradictory. So we as a country also need to reposition ourselves and decide, what do we want from this? Where do we want to align ourselves over the next 10, 20, 30, 50 years? And I think that's probably going to be fundamental and what comes through this next G20 summit.
Yeah, it's interesting to try and speculate where we're going on what we're gonna do. And yes, I mean, ultimately you're 100% correct. We can't play both sides of the fence. At some point, a decision is going to need to be made. Where are we going with this? What are we doing? And I don't know. I don't have a crystal ball. I can't tell you what's going to happen. But yes, I think there is a good chance that we're going to see some significant shifts in global policy and global economic power over the coming few years, over the coming decade. And it more and more is starting to look like me like it's going to be shifting towards the east instead of staying in the US. You know, it's going to be shifting to India, to Korea, to China, all of those countries.
And again, what we've really outlined here in this episode is we spoke about gold, silver, platinum, and so on, having these retractments from their highs. And now suddenly people are getting concerned, is this going to be the big drop? And what we've really just highlighted is so much instability, so much unsureness of where the future is, both domestically and internationally, from all countries. You hear the same story in the US. Domestically, they're not happy. There's major issues, housing, employment, and so on. That it's not all rosy. And again, we look in this country, we look at other countries, and people are battling. People are under pressure. And this does stimulate this next growth period. Will the likelihood of more international conflicts will arise, and that is very key to where we're going. And again, I highlight this: there is too much instability for gold not to be relevant.
And yes, I mean we're going to see the ups and downs, but I think the biggest thing is don't fall for the headlines. It's as simple as that. I mean, we're seeing gold and silver prices decline, 6 and 7% drop, marks lowest in 12 years. It's still up about 40% from where it was in January.
Yeah.
And you know, it's a bit of a disease that we have in modern society, headlines and sensationalism. And you know, we see something like that, and it's easy to get caught up. It's easy to fall for it and say, oh goodness, what do I do? The truth is, don't jump to conclusions. Don't fall for these headlines. Just simply assess it calmly and know that it's going to regain that 6%. It's going to regain that 7%. It might take a year. It might take 2 years. It might take 10 years. But ultimately, it's going to go back up there.
But it might even take a couple of months. in real, based on where we are. I'm more in the belief that we haven't seen this run stop. I think these are just momentary periods of that deep breath and then carry on. And we are going into November, so we're going into the traditional period where, from a supply perspective, gold starts to increase towards the end of the year. So I don't see it slowing down. We look at the industrial demands in silver and platinum, and they have not slowed down.
Yeah, I mean, industrial demand isn't going to slow down, especially with the green economy picking up at the moment, with green energy and alternative energy sources like solar, like wind power, electric cars, etc., etc. The demand for platinum and silver is going to remain high and only keep growing.
Villamy, in closing, any final thoughts?
I think we've pretty much said it all. Yes, it's down, but don't panic. Take the words from the Hitchhiker's Guide of the Galaxy. Don't panic.
And I think that's a very important thing. I think and what we've also reiterated in this episode is it's about the long play. We've always spoken about that. It's not about the losses or the gains in the short period. Yes, it's been phenomenal over the short period, but it's about 2, 3, 5, 10 years of staying in that asset, being gold, being silver, and then starting to see the real value.
If you liked the episode, hit the like button. If you want to see more, be sure to subscribe, and we'll see you guys next time.
Take care. Bye bye.